C. Jairam joins us, Joint Managing Director with Kotak Mahindra Bank. He joins us live from his Mumbai office. Mr. Jairam, the Finance Ministry is of the view that rupee will recover soon. What are your thoughts? It's going to happen anytime soon, or rupee has got hit and it will be a while before it will recover?
Well, I think the time frame, of course, is very difficult to sort of get right. But I think it's fairly clear that a little bit of overdoing has happened. And clearly, I think the rupee has depreciated to levels well beyond what most people think it should be at. And I think it's reflected the fact that if you look at REER, etc., I think it certainly indicates that the rupee should be stronger. So I think while there could be some temporary sort of panic around this extreme volatility which one has seen in the last few days, I think within a reasonably short period, I think it will correct. And my sense is that levels of something around 57, 58 are probably more sustainable levels for the longer term.
Mr. Jairam, if you look at the dynamics of equity markets, foreign institutional investors have turned net sellers. Up until now, Indian markets have got addicted to cheap global dollars. For the first time in many years, foreigners, not only they've stopped buying, they've also started selling. If another $2-3 billion gets out in next 1 month or next 45 days, do you think Indian markets can withstand that kind of an outflow?
I'd probably say that it's a little too early to have such an alarmist sort of projection. What you're saying is absolutely right, that after many months of positive inflows over the last month or so, you've started to see the first outflows sort of happen. Obviously, the big trigger has been what's happened in the U.S. economy ever since Ben Bernanke made his announcement about slowing off QE. I think this has started to happen, and it's not just India, but across the board, all emerging markets, and you've seen markets like China, etc., take a fairly severe drubbing as well. So I think this is part of a broader sort of trend, and as in all these trends, the initial sort of emphasis is much more. I think it will start to get a little more muted as we proceed. And my sense is that while you might still see some selling, it's unlikely to be sort of sell at any price sort of issue, because clearly valuations also start getting reasonably attractive at lower levels.
So, Jairam, we also have the Cabinet Committee on Economic Affairs meeting soon to take a call on the gas prices. Do you think a hike will go by this time, given the fact that while commodity prices have cooled off, so has the rupee, pretty much negating the effect?
Yes, I think from whatever one has seen over the last month or so, and I think this goes back to a more historical sort of trend. Whenever the country is on the verge of a crisis, or there are very serious sort of situations happening, I think far more sensible decisions start to get taken. And there seems to be an urgency in some of these decisions as well. We've seen that not just in the context of gas pricing, which hopefully will sort of happen today, but also in the context of some of the more micro decisions which the government has done over the last few weeks, which include the whole issue of imported coal and how it can be imported and then passed on to passing through Coal India. Similarly, there was an issue about whether large entities which had bid for highway projects could sort of sell it at some point of time. I think on many of these, you've now started to see the government intervene fairly forcefully and make far more realistic, quick sort of decisions. And my sense is that given where we are today in the economy, you start to see a lot more of this over the next few months.
Mr. Jairam, what's the take on IT as a sector then? Do you think the near-term benefits of the rupee cool-off are now already in the price and it may be time to book profits?
Well, I think IT overall, particularly the larger IT companies, is a space we broadly like. And I think the rupee depreciating has clearly helped that as well. I think the only grey area there is this whole issue of the U.S. immigration laws with respect to IT professionals, which there is still a fair amount of ambiguity about. And I think once there is more clarity on that, you can take a firmer position on IT.
Mr. Jairam, so do you think once the dust settles down, do you think India will emerge as a clear winner?
I'm not entirely sort of sure that we are such a runaway winner at this point of time, because the reality is that on the one hand, you have a clear re-emergence of the US economy with all the sort of concurrent things that go along with it, the strengthening of the dollar, increase in US bond yields, all of that. What that means is that certainly many of the emerging markets will lose some sheen. Now the question is, which are the emerging markets which will continue to be under pressure for longer periods of time? And one of the sort of ways to look at it is that if there are countries with consistent current account deficits which are not getting corrected fairly quickly, those could continue to remain under some pressure. And unfortunately, I think India is one of those countries, maybe along with Indonesia and South Africa or Turkey, which continue to have high current account deficits. And to that extent, I'm not so sure that even at the end of all this, we'll be really a runaway winner, as you want to call it.
So when do you think benchmark indices will snap out of this 4-year trading range? All we've done in the last 2 years that we've moved in a very broad 20% Nifty band.
See, to me, when we assessed this question about, say, a month or two back, I think there were only two clear triggers for this whole sort of thing to break out of this range. One was sort of consistently declining interest rate sort of scenario, which could have led to a growth momentum. Unfortunately, thanks to whatever has happened in recent times, particularly on the back of the currency volatility, I think that's unlikely to happen. So I think interest rates are likely to be sort of remain at these levels for a period of time. And then the only other trigger was if, for argument's sake, there were early elections, and that early elections sort of led to some optimism, and on the back of that, a new government came in with some policies which at least seem to indicate that we're willing to move forward faster. So I think these are the only two triggers, and the first one, the interest rate trigger, clearly seems to have sort of gone into the background for a period of time. About the second one, I think it's anyone's guess, and till we get some clear sort of indication on that, I would suspect that our markets would be trading in the ranges which we have seen earlier.
Jairam, what explains the underperformance that we've seen from the banking sector all of these months?
I think banking sector is reasonably clear. I mean, I think a couple of factors. The immediate sort of short-term factor is the fact that as interest rates kept going down, most bank treasuries were sitting on huge MTM profits, all of which have got considerably reduced in the last 1 month thanks to the bond movements. So I think that's the immediate sort of reason. And the other sort of broader, more macro reason is that as the economy continues to be sluggish, there are concerns both on credit growth as well as whether NPAs will start to get a little higher in the banking sector. So I think there are adequate concerns right now on that sector, and that is probably reflected in the underperformance.
Right, Mr. Jairam, appreciate your time and thank you for joining us.